On the equities, we're 51% net invested in equities. The range since the fund started has been a high of about 85% and a low of 48%. And actually, we hit 48% about a month ago when markets were higher. So we were then as low as we've ever been, and we've pushed it up a little bit since then. And my big fears, as people will know, is that we're worried about the sovereign debt issues, particularly in Japan and Europe, and that is the biggest worry, which prevents us having a higher weighting in equities. On top of that, I look at profits as a percentage of GDP, and I think, well, they're quite high, probably at some stage going to go down, which makes me cautious. On the other side, quantitative easing or money printing, certainly in the short run, has a beneficial impact on equities. The fact that I think we'll have quite a lot more quantitative easing in the future prevents us having a lower equity weighting. In terms of where we've been in equities, actually, we've just started moving in at a small level into the emerging market world, in that we have 2% of the fund in Russian oil shares. We've added to our positions in HSBC and Standard and Chartered, and we've got exposure to a few investment trusts which are emerging market investment trusts at a sort of decent discount. So just we've been pushing in gently from a position where we had very few emerging market companies or any exposure to one where we've got a little bit of exposure in the emerging markets. We still have very large bond short positions. We've held these actually since the fund has started, and they've got bigger and bigger. So they are equivalent to 100% of the NAV of the fund, which is the maximum that we're allowed to have. And my views are as strong as ever on this. If you take a country like Japan, where the demographics are very poor in that the population is actually declining now, and the age 16 to 65 working age cohort is declining really quite rapidly. On the other side, you've got the democratic pressure, which is encouraging politicians to spend money they haven't really got to provide services that the people expect. It means the debt levels got ever higher, and they have to be supported by an ever lower number of working people. At some stage, I expect this system to break down. It'll involve some form of sovereign debt crisis. So in terms of where we are in individual countries, easily the biggest position is and has been in Japan, which is about nearly 2/3 of our short positions. The other countries that we're short of are the UK, the US, Italy, and France. And we've been moving away from the US and the UK, where the worry to me is one day inflation will come out, and I'm not so much worried by the sovereign there, to Italy, France, and Japan, where I just think with their debt levels there and what's happening in those countries, I worry that there will be a sovereign debt collapse there, because at some stage they just won't be able to repay their debts. We currently have about 10% of the fund in commodities, and they're all gold-related. So the biggest positions gold, then platinum, and we have positions in silver and palladium, and obviously all those have a correlation to gold. We've had gold in the fund since launch. The lowest position we got to was slightly under 5%, nearly just over 2 years ago when the gold price got to $1,900 an ounce. Since then, gold's gone down quite a long way, and we've gradually rebuilt weightings up to 10%. And the reason I like gold is firstly because you can't print it, and obviously a lot of governments are printing their own currency, but you can't print gold, which is the main reason for holding it. Other reasons for attracting me to gold are that historically gold has liked situations when you've had negative real interest rates, which we've got in large parts of the world, and it also likes low nominal interest rates. So there's no obvious alternative cost of holding gold, because if interest rates were, say, 5%, 6%, 7%, then you've got a real decent offering from cash as opposed to gold. And the final long-run reason I like gold is again a sort of slightly a geopolitical one in some ways. I expect on a multi-year view, particularly China and India, to get a lot larger than they are today versus the developed world. And I view that as a sort of inexorable process in some ways. And it'll be a bumpy one, but I view it'll get there. And both India and China particularly are much more natural holders of gold. So particularly India, but also China, they are more comfortable, or wealthy people there are more comfortable holding gold, where in the UK and America and Europe, gold is often viewed as the preserve of a few wealthy people, but it's not really viewed as a core asset, which it is in India and China.